In this video, we'll be talking about European VAT. It's a tax which is obligatory to pay if you are selling on Amazon or other e-commerce platforms in European countries. Our guest today will be Alex Wyatt from Symply VAT or Symply VAT, and she will do like a workshop style presentation for you to understand what you need to do if you are starting, especially if you are starting Amazon journey in European marketplaces. So she will explain how to stay compliant and what actions you have to take in order to be compliant. And before we continue, I want to introduce sponsors of this broadcast. It's Zonguru, Awesome, and Getida. Zonguru is an all-in-one suite for Amazon sellers, useful at any stage of their business. So you'll find the offer and the link below in the description. Awesome is a FBA aggregator created by ex-Amazonians, and they would be happy to look at your brand if you want to sell it. So maybe they will acquire you. Contact them as well via the link in the description. And finally, Getida is a audit and reimbursements solution for Amazon sellers, and they can help you to get money back from Amazon because Amazon might owe you some money. Again, offer and the link in the description. Finally, in this video, you will also meet Lisette Lees. She works with different Amazon brands and hosts Orange Click videos. And as always, click subscribe and whatever buttons you see, don't click this kind of button below this video. It will help to everybody to save the world. All right, next I will present you the speaker.
Let's get ready for Alex Wyatt at the KLIK Box Summit Chair.
Hi Alex, how are you doing?
Hello, good. I'm doing well, thanks. How are you?
Good. We're super excited to have you here today to talk about very important topics. So before we go into that, could you please introduce yourself and tell us what you do in Symply VAT?
Yeah, sure. So my name is Alex Wyatt. I am the Global Projects Manager at Symply VAT. And all that really means is kind of a glamorous way of saying that I help all of our clients and our business get through all of the big changes that are happening in VAT to this day. So that includes Brexit, the EU VAT changes, anything that's kind of coming up affecting sellers, making sure that they are staying compliant as we go through such a big period of change. We are there to help. So yeah, and just a little bit about Symply VAT as well. We help e-commerce businesses from all walks of life, from startup all the way to multi-million-pound retailers with their international VAT compliance. So that includes registrations, ongoing VAT compliance, anything like that we can help with on your journey.
Okay, awesome. Sounds really good. So can you give us a short summary of what you will share with us today?
Of course, yeah. So today I'm going to be talking about everything from startup to scaling your business and all the way to selling your business. I know we mentioned an aggregator like Awesome, for example. When you're going to sell your business, you need to make sure that you have been compliant throughout your whole entire business journey. So it's important to make sure that as soon as you're starting up, you're thinking about taxes, as you're scaling, what you need to think about, and all the way to selling, what you need to make sure that you have in place in order to sell your business from a scaling point of view, from a VAT point of view. So that's what we're going to be covering today.
Okay, sounds really good. So we are ready. So if you're ready as well, then take the stage and let's see what you have for us.
So it's really called health checking your VAT. So like I mentioned, wherever you are in your journey, this presentation will hopefully help you. So stay with me for a minute here. So when we're looking at starting up your business, there's so many different things to think about. We have, your product, which is the most important thing, the market you want to enter into, where you're going to sell, who are your customers, customers, where you're sourcing your products from, the rules and regulations about actually surrounding your product, if it's a tech product, making sure that it fits the different, plugs in the walls, for example. And then also all the way to finances and taxes, you need to make sure that you are compliant. So there's so many different things as a business that you need to think about when starting up your business. And we're just going to cover off that tiny little bit of tax. And it's actually a really important thing to make sure that your business stays compliant and grows sustainably into the future. So when you get started, there's a bunch of questions that we need to answer. So first of all, which country are you registering your business in? What are the local thresholds for VAT when registering? Which markets you're going to be trading in and holding your stock in? Where you're manufacturing your goods? This all impacts your VAT obligations. Who are you selling to? Is it B2B business customers, or is it B2C? Where are your goods shipped to? And finally, setting your prices. This is all the stuff you need to think about as you're getting your business going. So we're going to deep dive into each of these points here. So where is your business registered? Where is it established? And I've kind of broken it down into 3 different portions of the world. So we have based in the UK, based in the EU, and based outside of the EU and the UK. This is all going to impact where you need to get VAT registered. So typically, each individual country will have their own VAT threshold before you need to be VAT registered in that country where you're established. So for example, if you're a UK-based business, you would have £85,000 before you have to actually get VAT registered here in the UK. So each EU country and each country outside of the EU would have their own specific threshold. So make sure you're doing the research into seeing exactly when you need to get VAT registered in each of those countries where you're established. If you are a foreign business going into a new country, there is typically no thresholds to exceed. You would have to get VAT registered or sales tax registered right away. So make sure that you keep that in mind. So if you're an established business, you get a little bit of a threshold, a little bit of a buffer room before you have to start charging VAT taxes on your sales. And then if you are a foreign business entering a new market, say you're a UK business going into France, you won't have that threshold to benefit off of. So make sure you keep that in mind. Once you do reach a threshold in that local country where you're established, you're going to need to VAT register your company directly with the tax authorities. So you can use a local accountant to do this if you don't want to do it yourself, or you can do it yourself straight through the local tax authorities. And they typically have a step-by-step process on how to do this. Next, we're going to be looking at which markets you are trading in or you're holding your inventory in. You are going to potentially want to get VAT registered to declare any stock movements or to make any domestic sales. So if you're holding your inventory maybe in an Amazon FBA warehouse, you've moved your goods into Germany because the German market is one of those biggest markets, and that is going to trigger a VAT obligation. You're going to need to register locally for VAT in Germany, and what you're going to declare there depends on what type of business you are. So you would have to declare domestic sales, stock movements, or import VAT reclaims if you're sourcing your goods from outside of the EU. That all goes on your local VAT return. If you're making any B2B transactions as well, that's also going to get declared on there. So it's best maybe to speak to a specialist at this point. Depending on the type of supplies you're selling, you may need assistance getting VAT registered. If you're a business that may be drop shipping, so you're maybe manufacturing your goods and selling straight from the manufacturer, this is going to depend on where your manufacturer is located. So if your manufacturer is located within the EU and you're making cross-border sales, so your manufacturer, for example, could be in Spain and you're making a sale to a customer in France, you're going to want to get Union OS registered. And this is a new one-stop shop scheme, and you're going to get this registration in Spain where your manufacturer would be. If you're making domestic B2C sales from that manufacturer, so again, using this example, your manufacturer's in Spain, and you're selling to a Spanish customer, you're going to get a local VAT registration in order to declare those domestic sales. Next, we're looking at who are you going to be selling to? Is it B2B or is it B2C? And this all has an impact on what VAT rates you charge, where you're declaring it. So let's look at B2C first. B2C cross-border sales. So once your goods are already in the EU fulfillment centers or 3PL, when you are declaring your cross-border transactions, so anything crossing an EU border, you are going to want to use the Union OS scheme. If you're selling B2C cross-border but importing your goods into the EU with a consignment value less than 150, you're going to use the import one-stop shop scheme. So again, this is a new scheme that came into play right at the beginning of July 2021. So it's a very new scheme for many sellers. If you're making domestic sales within an EU country, you're going to record this all on that local VAT return. So you're going to need that local VAT registration. Now looking at your B2B transactions, and maybe you think, oh, I'm not going to sell much B2B, but Amazon does have a B2B program where you can sell directly to businesses on the Amazon business program. So maybe you might get a few sneaky orders in there that does come from a VAT registered business. You're going to want to make sure you're declaring these correctly as well. Your B2B cross-border transactions, they're going to go on your local VAT return. They can be covered under what's called the reverse charge mechanism, where you're essentially zero rating your invoice. And you're also going to declare this on an EC sales list. It's a intra-community supply of goods. So you're going to be declaring that movement of taxable supply between the EU countries. For B2B domestic sales, so where you're selling to a VAT registered business in the country where your goods are located, this is really going to depend where what the local rules are in that country. So there could be a local reverse charge mechanism if it's applicable in that country, or you could be charging domestic VAT on that transaction. For somewhere like Germany, for example, you'd charge the German rate of VAT, but in France, you would have a local reverse charge mechanism. And then some countries may not even require you to VAT register if you're only selling B2B domestically. So it really depends on what sort of transactions you're selling. Just one more thing on here. If you're selling on a marketplace, marketplaces are starting to become liable to declare and collect the VAT on your behalf. So it's important to make sure that you are checking to see who is actually going to be responsible to collect the VAT. If you're an EU established business, the marketplace is not going to collect that VAT for you. You need to make sure you're collecting that and reporting that to the tax authorities. If you are a non-EU business, the marketplace is going to collect and remit the VAT to on your behalf, but you still may have a obligation to VAT register locally. So if you have questions about this, make sure you're speaking to a tax specialist. Next, setting your prices. So this is a really important one for many businesses, and especially because these new EU VAT rules have come into place, which means you're going to be charging the local rate of VAT where your end customer is located. And this is quite a big deal because across the EU member states, VAT rates fluctuate between 17% and 27%. So if you don't get your prices right, then you could be losing out on a huge portion of your margins. So you want to make sure that you're really looking at this pricing and taking it quite seriously when setting it across the different marketplaces. So I've given two different examples here. If you're setting your price with a net value, knowing exactly how much, incorporating all your margins, what your profit margins are, how much Amazon is taking, setting that net value, what do you want to sell it at, and then adding VAT on top of there to get your gross price. In the example here, I have on the left-hand side, the 20% VAT rate is for example, if you were selling in France, and the 25% VAT rate is if you were selling on Amazon Sweden. And you can see that the price, the gross price is ultimately different, but you know exactly what you're going to be getting. You are making that $54.99 on that product, and it doesn't matter where your customer is purchasing from. If you look on the right-hand side here with the example of setting your gross price, maybe you just decide, oh, I want to set one single price across the EU. I don't want to fluctuate my product price depending on the market. You're going to see that the net amount that you come out with is going to differ depending on the VAT rate. So if you are really cautious, you have a really tight margins, you may want to look into setting your net price and then adding your VAT on top and setting those prices across the different markets, instead of setting the gross price, setting it at a higher rate and then deducting it down, because you may end up eating into your profit margins, and it might be a very small margin. So keep that in mind when setting your prices. Okay, so next we're looking at scaling your business. So we're going to be covering testing a market, ensuring you're compliant, and then looking at multiple platforms and multiple fulfillment locations. So testing a market. So it's going to be great for a business to test a market, see if it's worthwhile entering into and investing in that market, such as using a 3PL or paying for PPC or even local language translation, for example, and really optimizing your listings in that local language. But even if you are testing the market, you may still need to be VAT registered in order to be compliant as you test your products. So keep that in mind. You can't just send a bunch of products into a market and think, it's going to be okay, I don't need to worry about taxes. You need to make sure that you are complying right from your very first sale, especially because the EU tax authorities have really been clamping down recently. So again, as a reminder, if you're selling cross-border, intra-EU, you're going to want to get a Union OS registration, the one-stop shop registration. And if you're selling imported goods with a consignment value of less than 150 euros, you can get an IOS registration. Another thing to think of when you are looking at expanding into a new market is that VAT registrations can take a good amount of time. Sometimes in specific countries, it can take anywhere up to 10 to 12 weeks to get a VAT registration in place. What that means for your business is you don't want to decide that you want to test a market, have your products waiting to go, and then you can't start selling because you don't have your VAT registration in place. So maybe start thinking about getting VAT registered before you enter a market, maybe whilst you're waiting for your samples to arrive or the freight forwarding process to happen, so that you can make sure that you are properly VAT registered and ready to go as soon as your products hit the fulfillment centers and you can start selling. If you're not collecting, one of the questions that I want you to really ask is, if you're not collecting the tax, who is collecting the tax? So like I said, marketplaces have recently started to become liable for specific transactions to collect the VAT. So I want you to look at which platforms you're selling on and check to see if they are collecting the taxes. If they aren't collecting the tax and you're not collecting the tax, who is collecting the tax? So you need to make sure someone is along that sale. If not, ultimately the responsibility is going to come back to you, the seller. And if you haven't put that money aside, you could be getting a hefty bill from the tax authorities, stating that you haven't paid your taxes, and it could really impact all of your cash that you might have on reserve or put you into debt. So it's important to make sure you're checking out who's collecting the taxes. Next, we're going to look at multiple platforms. So if you're selling on multiple platforms, I want you to keep in mind that each platform is going to have their own VAT rules and regulations. So I've mentioned a few times that marketplaces are going to be collecting VAT for specific transactions, and it's for specific types of sellers. So marketplaces now must collect VAT for non-local businesses. So say an EU marketplace would need to collect VAT for a US seller, for example. But if you're an EU seller, the marketplace is not taking on that responsibility. So you need to make sure you're checking that specific platform who is going to be collecting the VAT. If you're selling on a platform like your own website, for example, maybe a Shopify site or your WooCommerce website, for example, these platforms are not responsible to collect the VAT on your behalf. So you need to make sure that you have the facility to collect the VAT, you are getting VAT registered in the correct EU member states, and then declaring the VAT that you collect at the point of sale from your transactions. So make sure that you are getting checking out each individual platform if you're selling across multiple, and seeing who is responsible for collection of VAT. Then, if you're scaling your business, you might even look at multiple fulfillment locations. There's lots of different benefits to actually having multiple fulfillment locations, such as getting closer to your customers, and having access to, maybe you're using Amazon FBA, you'll have access to prime delivery to your customers. So you can also save your customers and yourselves, if you're paying for the shipping, on all those shipping costs instead of having to go cross-border. And the last thing you could also save on is actually import VAT and duties if you're importing each and every one of your items or consignments to your end customer. So there is a huge benefit to having fulfillment centers in multiple locations to get closer to your customers. But when you're doing this, you need to make sure that you're getting locally VAT registered wherever you're holding your stock. I've heard a lot about sellers using a 3PL to drip feed their stock into Amazon FBA because there's been inventory limits into the FBA centers. So if your 3PL is based in the Netherlands and you are shipping your goods into Amazon FBA in Germany, for example, you're going to need a VAT registration in the Netherlands and Germany, because you're going to have to declare the movement of taxable supply between the two EU member states, and make sure that you're declaring the sales ultimately on your German VAT return. So you need to make sure that you're getting VAT registered wherever those fulfillment centers are, to make sure you can document the movement of taxable supply, reclaim any import VAT, and if you are making sales from a 3PL or that location, you can declare those domestic sales on that local return. Okay, now we've mentioned, like I said, the aggregators. There's a huge amount of aggregators that have come into the industry recently, picking up a lot of Amazon businesses. So you may be looking at the stage in your business where you're thinking it's time to sell, or you might be thinking, I'm going to start preparing my business to sell to one of these aggregators, and retire from the e-commerce world, for example. So there's a few questions I want you to answer to prepare your business, to make sure that you are ready to sell your business onwards. So first of all is, should you have been VAT registered a long time ago? Now, when I ask this, I mean, should you have been VAT registered because maybe you were holding stock in an EU country and you didn't realize that Amazon had moved your stock into multiple EU countries. Maybe you crossed over a distance selling threshold when the distance selling thresholds were still in place. Should you have been VAT registered? If you should have, you may want to look at making sure your accounts are all up to date and making sure all of that backdated VAT is declared to the right tax authorities. If not, you could get an audit down the line, or even the buyer could get an audit down the line, and there could be some legal issues there. Next is, have you filed all of the returns where you are registered? You want to make sure your account is all up to date when getting ready to sell. You want to make sure that you have all of your VAT returns so that you can hand these over to the business so that they can have a smooth transition when they're taking over your accounts. So you want to make sure that all VAT returns are filed. Next is, do you have any outstanding VAT, interest, or penalties due on your account in any of these EU countries? Again, if you do, you will want to make sure that this is all paid up, because if any of these aggregators are doing a check on your business, this may impact your sale or saleability going into the future. And finally, are there any audits ongoing on your account? You want to make sure that this is transparent to the seller, or sorry, to your buyer, who's ever buying the business from you, so that they are completely aware of what sort of audits have gone through and where your business is at during this audit. You can't just give up an audit halfway through. Unfortunately, you need to make sure they're completely paid out. The number one thing I want to say to businesses that are looking to sell your business onwards is make sure you're keeping records. So you're going to want to keep records of your imports. So if you're manufacturing overseas, you're going to have maybe a C79 documents here in the UK, or C88 documents relating to these imports, or even import VAT statements as well. Keep all of those records, because you could get audited, or your buyer could get audited in the future once you sell your company, and they'll want all of this documentation in order to be as truthful and to kind of ease the audit process. Next is proof of export. So this is for individual orders. So if you're holding your stock here in the UK and maybe selling cross-border directly to customers in the EU, you're going to want proof of export of each and every single one of these transactions. So if you have this as an automated type service with your courier, make sure you're just keeping all of those files stored in the cloud, and that you have access to them that you can send onwards to the buyer. Next is your B2B transaction invoices. You're going to keep records of these as well to make sure, again, if an audit does come up, that these records are in place. You'll want all transactional data and invoices. For a fact, I know that these aggregators or a buyer will want to see all of the transactional data, so you'll need that anyways, but you'll want to make sure that this is all kept on file, so that, again, that they always have this data to go back to should anything happen to your account going after the sale. You'll want to keep a record of all your VAT returns and all of the proof of payments of VAT to make sure that that is all squared up on your account, and that the buyer knows exactly that you don't have any VAT outstanding on your account, and that's not going to impact, again, your saleability. When you're discussing your terms of sales, it's going to include how you're reporting the sale of the assets. And this is something that you're going to have to report to the local tax authorities when you are selling your business. And for example, here in the UK, if specific conditions are met, then there's going to be no VAT charged on the sale of assets as part of the transfer of a business as a going concern. So this could actually benefit your business, that you don't have to charge VAT when you're selling the assets alongside your business. But you need to make sure that the business is being sold under specific conditions. So this is just for an example here in the UK, but it could be different depending on where your business is established. So make sure you are discussing this in your terms of sale, and whether or not VAT needs to be included on the sale of your assets or any leftover inventory, for example. Next, you'll also want to be discussing who's going to be liable if there is a future audit. You'll want to make sure that this is covered, because, like I said, if your account isn't all squared up, this business probably does not want to be liable for any outstanding VAT payments that you failed to declare. So this could result in some legal action. So you want to make sure that you are discussing who's going to be liable eventually if there is a future audit on your account and there is VAT outstanding to be due. Overall, I want to say that VAT isn't something to be afraid of. And like I mentioned, it's just a little small portion of your overall business journey. But I don't want you to be afraid of it. And there is different, I want you to take your time and make sure that you're considering taxes all throughout your business life cycle and making sure that VAT is a constant, you're constantly reflecting and making sure you're set up for success, because ultimately you don't want to be getting a bill from the tax authorities at the end of a month, for example, saying that you have leftover VAT to pay. So it's about making sure you're forecasting correctly and setting up your accounts for success, and then your business is going to be a success going forwards. So that's all I have for the presentation today. So I'm happy to answer any questions that you might have on your selling journey. So thank you.
Okay, so we have a few questions. Let's start with first. Let's talk about the ClickBox promotion. So everybody who is watching, this video is part of the ClickBox series. And by the way, don't forget to like and subscribe if you so far like the content, like the step-by-step instructions how to set up your business in Europe in terms of VAT compliance. And now, this video is part of the ClickBox promotion, where we gathered deals and offers from more than 20 services and tool providers in Amazon space. And one of them is Symply VAT company. And they are offering, what are you offering? Can you remind us?
Yeah, we're offering free pan-EU VAT registration. So if you're looking to set up your business in multiple EU member states, such as Germany, France, Italy, Spain, Czech Republic, Poland, under the Amazon FBA pan-EU scheme, you get that all for free.
Yeah, and
sounds really good.
Yeah, and if you would like to take advantage of that, you just go to the link which you will find below in the description for the ClickBox page. And if you purchase the ClickBox, you can get this all the registrations done for free. And now we have a question related to that. Let me find it. So someone was asking if, in general, registrations are free. Let's say if they don't take your service and they would like to do themselves. I think it's a headache to do yourself if you don't have experience.
A little bit of one,
yeah. Especially in certain countries.
Exactly. And if you don't know the language as well, it's going to be even more tricky. So yeah, it depends on how experienced you are in tax.
But are there costs to register? Let's say if you do it alone, or some minimal administration cost?
If you do it alone, there's no cost with the tax authorities. Obviously, they get your revenue from you signing up. So if you do it yourself, there is no cost, but you do need to go through the process of setting it up with each individual tax authority. Now, some tax authorities actually you will really struggle because you'll need specific logins, portal accesses, bank details in specific countries, such as Spain, for example. You can only pay from a Spanish bank account. So it's really important to make sure you kind of really understand the local rules and obligations in each country. If you have access to each and every portal, then by all means, you can do it yourself.
Good luck. Bendy is a US seller. He would like to sell in Europe. Do you have a checklist for him? I suggested to Bendy to watch this video again, and I think it's a perfect checklist. But do you have anything from Symply VAT? Maybe you have some giveaway.
Yeah, I can. I'll share a giveaway on our social media. So if you want to check out our social media, over the next few days, I'll get a checklist shared for you, just based off the back of this presentation, so that, like Augustus said, it is best maybe just try watching this video, but then check out our socials at Symply VAT on LinkedIn or Facebook or Twitter, and then we'll make sure that we share a checklist for you. So whichever stage of your business that you're in, that you have a checklist to go through. Make it as simple as possible.
And Bendy sees that selling price is includes VAT tax. It's correct, right?
Yeah, that's correct. So typically, when you are listing a product, you're going to include the VAT rate in that price, and that's why when when I talked about the setting your price and the importance of that, you are always going to set the gross price. And when I talk about the gross price, it's the VAT is inclusive of that total price. So that's going to be exactly what the customer pays when they go to checkout. And it's really important to work out the different VAT rates in those different countries. Start at your net. I highly recommend starting at your net price and then adding VAT. So if you're really localizing your products, you're selling on Amazon.de, .it, .fr, you look at each and every single market and then set up the specific price depending on that country's VAT rate. So in Germany, you're going to add 19% to that net amount. In France, you're going to add 20%. If you're on Amazon Sweden, you're going to add 25% onto the net amount. And it gives you a really good baseline to make sure that you are going to be collecting the right amount of taxes and not impacting your margins.
And I think this is where we could explain what is the difference between US sales tax and VAT in Europe, right?
Yeah, absolutely. So U.S. sales tax, and it's very similar to kind of to Canada as well, where when you go through your purchasing process on a website, you actually don't see any taxes, and then when you go to checkout, then there's going to be sales tax added at the point of checkout, and that is down to typically where you're located. So in the United States, it's based on your state that you're living in. It could even be the county that you live in. It all just depends on exactly what that sales tax is relevant to where you're located. And it's really similar in Canada. If you're purchasing in Ontario, you're going to get a specific tax rate that's going to be different to if you're purchasing from Alberta, for example. So it really just depends on where you're purchasing and making sure that you as you go through the journey, you're setting your net price in Canada and the US, and then the VAT is added at checkout automatically. And here in the EU, you're going to be setting the gross price and VAT is deducted. And it's a kind of a sneaky thing too, because typically Canada and the US, the sales tax rates are lower than what you get over here in Europe, where, Americans come over to the market and they go, oh, there's 25% VAT. Who pays this? And it's like, we don't even notice that we're paying 25% taxes. So it's kind of sneaky in that sense, but that's why we look at it at a gross price.
Okay, very good. We have one question more about the pricing. So I believe what you explained before was more about Pan-EU program when sellers are using Pan-EU, but there is a question about if a seller uses European fulfillment network, so they are selling on German marketplace, but they have customers ordering products from Spain and France. So how should they set the price on German marketplace? Then should they consider all the different VATs again?
Yeah, this is a really good point. So the VAT is going to be charged wherever your end customer is located. So it doesn't matter where the goods are being fulfilled from anymore. It's all about where the end customer is. So it is worthwhile checking out your transactions, going into your sales data, and actually looking to see if maybe you do have, for example, Austrian businesses buying off of the Amazon.de. Austria's VAT rate is 21%. So if you're getting lots of Austrian buyers, you don't want to be losing out on 2% of your product on your margins there. So you're going to want to kind of scooch up that little your VAT rate there and maybe increase your gross price to account for 21% because a lot of people are buying from Austria. And it's really similar to, like you said, if people are buying your products, they're going on to Amazon.de and buying from Spain or France, where Spain is, again, 21%, Italy, 22%. You need to make sure that you're accounting for this fluctuation. So it's a really kind of, it's an exercise in understanding where your customers are buying from, looking into the data and seeing, making sure that you're kind of covering your costs and outgoings, essentially.
Okay, very good. Thank you for the detailed answer. So Edward is asking, is the VAT based on where the customer is located? the billing address on the order, or where the item will be shipped to? For example, if it's a gift recipient in another country other than the buyer location.
Yeah, this is a really good question. So it is typically based on the billing address of the order. Yeah, it is typically based on the billing address, but it might be it might have changed after the EU VAT rules. I will have to look into this one a little bit deeper. Just off the top of my head, because of the changes, it's obviously slightly different than what it was before. But I would suggest looking at the billing address first. That's typically where they
But on the other hand, for the seller, it doesn't matter. Or it matters because Amazon
for the
is
seller, you just want to make sure
about,
that you're declaring it in the correct country.
Isn't it that you can download Amazon reports and it will be showing which country VAT you paid with the order?
If Amazon is responsible to collect the VAT, or if you've enabled Amazon to calculate the VAT for you, there's Amazon VAT calculation services where they actually generate invoices on your behalf. If you use a service like that, then yeah, they would calculate that for you at the point of sale. So that might be something to look into for your business. And then, yeah, Amazon would do it. If you're not using that calculation service and they aren't responsible, maybe you're an EU-based seller, you'll have to make sure you're declaring that in the correct country.
But Amazon knows like which VAT to apply. For example, I'm in Portugal, and when I buy from Amazon Spanish website, first they show me one price, but then when I go to the checkout, because it's a Portuguese address, the price is a little bit higher because of 2% higher VAT. So it means Amazon is taking care of VAT, and maybe it doesn't matter if the seller is using this VAT calculation like VAT invoices or not service. I don't know.
Yeah, it could depend on, again, like if Amazon's liable for that sale, or if they were liable for the sale, they're going to have that automatically generated. If it came from maybe a non-EU seller, they're going to want to make sure that they're covering their costs. So it just kind of depends on where that seller is located. And if Amazon has that automatically set up, they'll want to make sure that they're covering themselves and not being put out of pocket.
Okay, then a question about tax returns. So do I need to file a tax return even if no tax is owned?
This is a good question. So if you are already VAT registered and you have nothing to declare, maybe you had no sales within a specific period, you still need to file a tax return, and it's called a nil return. It's typically you go through the tax return and you declare that you've made 0 sales, but you do have to make sure that you make a declaration to the tax authorities. You can't just leave it and think, oh, I made no sales, I don't need to tell the tax authorities. They need to know. If you don't make a declaration, you could be facing fines. They may, like HMRC, for example, they make assessments based on previous periods of that when you've been selling and what you've been declaring, and they'll assess how much they think that you would owe, because they really want to make sure that you are paying the VAT that's due. So make sure that you are declaring a nil return if there is no taxes due within that period. You don't want to be chased up with interest or penalties when you made no sales. You don't have enough money to cover the penalties. So make sure that you're filing.
Talking about penalties, let's say if a seller is selling products without registration of VAT and they make sales, but do they what are the dangers or what are the fines and what to do?
So first of all, if you're an Amazon seller, for example, you might not even be able to get off the ground if you don't have your VAT registration in place. Amazon does have kind of validation in order to start selling, because again, they don't want to be liable. The tax authorities have made these new rules that make marketplaces liable for the VAT from their sellers if their sellers aren't complying. So they don't want to be liable, so they have these validations, so you might not even be able to get off the ground. Now, if you do get off the ground, or maybe you're selling through your own website, for example, and you start selling, you might have a grace period, and that might be fine. But ultimately, if you do get caught by the tax authorities, and it depends on which one. Now that the each individual tax authority, you're going to be paying VAT depending on where your end customers are. Each individual tax authority can come after you for that VAT that's owed. So you could have up to 27 different tax authorities coming at you, auditing your accounts, adding late payments, interest, etc. And you have to deal with that in all these different languages. So in terms of the risk to your business, it really isn't worth it if you do get caught out. The tax authorities do talk to one another. So one tax authority gets a hold of your transactional data and sees that, oh, you haven't paid your VAT to them. What about in this other EU country? They could go and tell the other tax authority as well. And notify, because it's a big EU-wide clampdown of making sure that everyone is complying, especially across e-commerce platforms.
Okay, we have one question more from Edward. So if VAT is based on the location of the purchaser, we would need to register for VAT in every EU member state, since customers could come from anywhere. Is that correct?
So this is what the whole new EU Union OS scheme is, the one-stop shop scheme. So the one-stop shop scheme is where you are registering to one EU member state, typically where you're holding your inventory. So say you're holding your inventory in France and you're selling maybe through the EFN network or through a 3PL, and you're selling cross-border to customers in every single EU member state. What you're going to do is declare all of these cross-border transactions on this one single union one-stop shop scheme return. It's a quarterly return. It only just launched at the beginning of July. So the first one's actually going to be due in October. And what you do is you're going to declare all of your transactions on this one single return, and it splits out each country's VAT. It splits out your total sales to and from, and specific cases, the total VAT amounts, whether it's standard rated or reduced rated for each and every one of the countries that you made a sale to. And then that single country where you file the VAT return, they're going to process that information, and you're going to make a single payment to that specific country. It's called the member state of identification, and then that tax authority is going to be responsible to split the VAT amongst the other tax authorities. So it's essentially a really simplified scheme where instead of having to register in every single EU member state, you can use the Union OS scheme, declare one quarterly VAT return, and then pay one single payment to one tax authority, and they split it amongst themselves. So it's a great question, it's a huge simplification for businesses.
And it's a great answer from you. So let's take a last question from Edward. So do you have to file quarterly or annually?
So for the Union OS scheme, it is a quarterly VAT return, but that's not to say that's the same for like the local VAT return. So each country has their own rules and regulations around the VAT returns and how frequently people need to file and declare their VAT. So if you are filing a local VAT return, then there are different filing frequencies such as monthly, quarterly, biannually, triannually, and on top of that, annually as well. So there's lots of different filing frequencies, and it could be based on what the set standard is in that country, or depending on your turnover, you could be moved on to different filing frequencies from the tax authorities. But the OS scheme is unique. The OS scheme is always going to be quarterly in every single country, but it's when you look at those local VAT returns, it could be quarterly, annually, monthly, whatever that tax authority wants. It's up to them to decide.
Thank you very much, Alex, for all your answers. If someone watching still have more questions, you will find the links to Symply VAT in the description, so you can contact Alex. Also, she displayed her email address, alex@simplyvat.com, so you can contact her directly. And again, check the links below for the KLIK Box offer. You can get free registrations take away your headache. Actually, if they take your offer to register for free, is the obligation to become your client?
Yeah, there is, but it's only for a limited amount of time. So yeah, we'd get you set up and then start filing your returns. And if you're like one of the questions and you want to do it yourself, then you can eventually take it over yourself once we set you up.
Yeah, but it's can be really complicated. As you said, like Czech Republic or German authorities will not work in English, so you have to work in their own language. All right. So thank you very much, Alex, and good luck in your business. Bye-bye.
Thank you.
Thank you.
Bye. And now I would like to invite you to watch other video with Alex, which we recorded a few months ago about European VAT changes in July 2021. There she talks in more details and answers questions in terms of what has changed in this space.